Hey everybody, Courtney Smith here with our May 18th Wall Street winners. Just racking up the bucks. What can I say? Let's get right into it. So I talked last week, I talked about how I was worried. And the things that I was worried about were the uh, lack of a new high on the prices. If this is a bull market, we should be making new highs. And I highlighted the low that we made at the beginning of May. Well, we actually broke that low on Thursday, which is quite bearish because technically we're now making lower lows and lower highs, although realistically we're really in a sideways pattern. But look at what happened to the purple predictor here in the S&P in the last week. It broke to new highs, showing that the smart money is taking advantage of this consolidation in the market to be buyers. So I'm not as bearish as I was. If the smart money's buying, probably a good idea for me to buy as well. Now over here we saw what you would expect. The selling pressure, which is the red line, was higher than the buying pressure. No big deal here. Look at this. Once again, in the NASDAQ has always been the leader now for several months. But look at what the smart money is doing. They're buying like crazy. So this is incredibly bullish right here on the NASDAQ. So the focus has to be a bit. This is not a sideways pattern. It made a new high. Just like I was saying I wanted the S&P to do it. Well, this is making a new high. So that's quite bullish. Okay, so NASDAQ type stocks, bullish. S&P type stocks, who cares? Dow stocks, probably a little bearish. So what this means is we're in the proverbial market of stocks. In other words, it all comes down to stock picking. It's not a market of stocks. It's a market of stocks, not a stock market. So very important that we focus a lot on picking the right stocks. Now, this is the normal indicator here. My compatriot Chris decided to add a second chart down here, and I'll explain that in a second. So our seasonality chart has two different seasonalities. Okay. So generally speaking, the stock market is bullish from Sep 1 to May 31st. This should be to April 30th. Utilities get bullish right at that point and go not there either. Those are slightly wrong, but it's the opposite of the stock market. So right now, the sell in May and go away. Well, so we're in the seasonally neutral period in the stock market. But the seasonally neutral period is when utilities become bullish. So right now you can see they're here they're clearly in a bear market right now. Purple predictor is negative. So we're not going to be buying utilities. But if we start to get a bull signal, we'll start to buy utilities because they are in a seasonally bullish period. Okay. We're now getting into that period. We talked the last couple of weeks about this dip into late May. And as I say, right now we're working on the green line. And so it looks like that dip is almost over here. So maybe another week, we might be under a little bit of pressure. And then look at what happens. The market just takes off. And from here on out, we get about a 13-14% rally in the stock market on average. So that would be very sweet. I'll take it. Dynamic yield curve still doing nothing here. The Fed's just holding it there. Asset allocation, also not a lot of news here, so we won't go into it. We've talked about it. Stock market risk indicator is moving slightly lower. In other words, that's more bullish for staples and usually utilities, but you can see that utilities were not extra bullish at all right now, but it just means that they're going for more safe stocks. Global shares look the same as the Dow. Bonds a little bit stronger this week. I'm still not convinced they're going to go anywhere. I actually think they're going to be a little bit under pressure to catch up with some of our indicators. Aha, and here are the indicators. So the green line, I've mentioned this before, so I won't spend as much time on it this week, but the green line shows yields. The biggest competitor is the blue line, 10-year German yields, and they normally run in the same direction, but it looks like the 10-year in the U.S. went down farther. Now Germany's in a recession, so I thought that the U.S. yields would go up. I still think so, but the German yields will probably go down. Now, at the same time, this big down move in prices, that's the CRB, that still suggests lower interest rates, but here's the price of gold. That suggests higher. So guess what? Probably will just stay about the same. Dollar, speaking of staying about the same, that is incredibly boring. Gold broke out to the upside, so fully paid up members, we're going to be getting much, much longer gold. We're already long gold, but we'll get much longer this week. Now, this pattern here suggests that we can see the price of gold get up over here somewhere, which is high $1,800 per ounce. So maybe about $100 an ounce on this rally. That would be pretty nice. That would be pretty nice. All right, our indicators are all neutral, but we do have extra indicators in the fully paid up section, and they are turning bullish. Crude oils did a little bit better than I expected. I didn't think I thought we'd get up to about $30 a barrel. Here we are. I think we're going to have a very hard time moving any further. And finally, in Bitcoin, like I say, it looks bullish. I don't have a position here. Purple Predictor was quite negative over here, but you can see it's starting to accelerate to the upside. It made a higher high here, and Bitcoin did not. So this is actually bullish divergence. So look for Bitcoin to continue to move higher. I'm not ready to be a buyer yet, but getting close. All right, thanks, freebies. Love having you here. Fully paid up members. Hang on just a second. We have some big changes in our portfolio. Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.